that sound means that we are now here live on our halftime report, Tackle Trading's daily show, where we go through the financial markets, including stocks, indices, equities, anything in corporate news, commodities, currencies, cryptocurrencies, pretty much anything grabbing our attention that we think can have an impact on the market. We break it down, we analyze it, give you guys some insight out there so that you can better run your daily routine. Welcome out everybody to our show here today. If you're a veteran of our community, hashtag Team Tackle right in the chat, represent. And as you come on in here, always those thumbs up are very much appreciated. Helps us get the word out. And if you are new to our channel, welcome. Click the subscribe button, click the bell, and come back and join us every day. Whenever the markets are live, we are live at 12:30 p.m. Eastern Standard Time. On today's show, we've got a little bit of a bounce here intraday, some tech stocks showing a little bit more strength in some of the other areas, but I would not exactly call this strong here yet. Still very much not out of the woods from a technical perspective across the broad market, but we're going to take a look at it. And really, market conditions like this, you got to be able to take a step back, breathe deep, assess it, try to build a plan and not get emotional about what's happening. We're going to analyze all the charts. Tesla battery day later in the day. We're going to talk about that. Elon put some tweets out to kind of temper expectations. We'll break down the information. Then some downgrade stocks across the board. More information out of China. And yes, Jerome Powell is testifying on Capitol Hill over the CARES Act. Got a full crew here today. We got Coach Tyler Craig running the screen. Got Coach Mark doing analysis, and Cody on the back end producing. Tyler, how you doing, sir?
I am doing great, Tim. Doing good. I'm excited to break down the action today. Got lots to talk about.
Just doing great. I like it. Marky, what about you, sir? How you doing?
Listen, I am as happy as a peach fanatic at Peach Fair. So that's how good I am doing today. So life is good, right? It's the last days of summer. In fact, is today the first day of fall? Is today the last day of summer or the first day of fall?
It's got to be the first day of fall. I think the 21st is the solstice, right?
So summer is over, and listen, fall is a majestic time. Leaves turn, you drive up in the mountains. There's so many good memories in the coming weeks. I love this time.
Yeah, no, I love this time of year as well, especially living in the mountains here in Utah. It's just beautiful. You get the foliage changing, all that kind of stuff. Very, very peaceful. It's not been a great time of year for the stock market here in September, but other than that, the weather's great, and we got to put some context around it. Tyler, let's start with the charts themselves because, I want to hear what Powell has to say. He's got more testimony today. Tomorrow, I have read the prepared statement. I know Mnuchin's going to be there, but quite frankly, I need more information to really know if they're going to be saying anything different, and we'll break a lot more of that down as we get it. But what we do have is we have the charts here in front of us. Can you run through these? And let's start with the S&P 500.
You bet. So we had a chance on Friday. You go back 2 bars. We talked about this in the weekend report. We had a chance of holding the 50. We had an intraday bounce on Friday. Wasn't pretty yesterday, that's for sure. Not at the open at all. We've broken the 50 MA. You've got a declining 9 EMA. The 20 SMA is falling. So the short-term trend is undoubtedly down in the S&P for the first time in months. And so the playbook has kind of flipped where investors have gone from buying dips. You look at weakness as an opportunity to get into some of these strong trends. Now we're kind of in a sell the rally environment where rallies are suspect. The up days, you have to be a little suspicious of now because you got a lot of overhead resistance. So the interesting thing when you get corrections like this is nobody knows how long they're going to last. Nobody knows how far this is going to drop. It could be over this week. We could be talking about the downtrend 3 months from now. Rather than trying to predict the duration or the magnitude of the drop, I just say, look, the path of least resistance has shifted. It's no longer up. It's sideways to down. Modify your trading accordingly. For me, Tim, 2 levels, and I like to put alerts on my chart on the S&P. 50-day moving average is a big one for me. That actually coincides with the 9. I like saying, look, if we can get back above that, that's the first step in healing this. The second would be just breaking a prior pivot high. Just the definition of an uptrend: higher pivot highs, higher pivot lows. We're not doing that right now. You take out the prior pivot high, and it's a completely different story. I think until then, you got to be defensive.
Mm-hmm. Yeah, and defense is different than panic, obviously, Tyler. I mean, if traders are panicking just because the market broke down below a pivot, I think they probably have the wrong context or lack of education on how to handle it, right? Because it is concerning from a chart perspective, but it's not like we're in a crash here, right? I mean, so what do you do to teach people how to play defense when charts are starting to weaken?
Well, think about this. Like if you say, oh, I'm going to wait till we're in a bear market down 20% or down 30%. If
Mm-hmm.
that's what you're waiting for before you get defensive, like I think you've completely missed the boat, right? So the way that you, stem bigger losses or avoid bigger losses in the future is you get defensive in potentially the early innings. We don't know if it's the early innings, but the beginning of when a trend turns. That way, if this becomes a larger downtrend, you're not kicking yourself 3 weeks from now wishing you got your risk reduced, in the earlier innings of the downtrend. So that's number one. I'm not trying to be overly pessimistic. I'm just being cautious.
Mm-hmm.
In terms of this, your second question was, how do you reduce the risk, or how do you go about being defensive?
Well, I mean,
right?
just how do you teach beginners? I know that you're the architect, the architect, what a beautiful name. And you actually did build the bear market survival guide talking about this. Do you write short calls? Do you hedge? Do you wait on a doji day where you've got most of the 10% sell-off already kind of built in place, where there still is some risk here, no question about it. You could fade lower here as the markets are developing. But I mean, do you start taking some of those actions right now?
Well, I think when you look at the progression, and how has this progressed? You have a really high volume sell-off down to the 50. You made a lower pivot high. You broke the 50-day moving average. You made a lower pivot low. Somewhere along there, you got to do something to get smaller or reduce risk. The thing that's challenging is if you nail it down to like one signal and you say, okay, once we break the 50-day, I'm going to shift my entire short-term trading account from bullish to bearish. I don't really like picking one day or one signal and making a big change to the portfolio, because you're either going to be really right or really wrong. And I prefer to be a little more methodical about it. And so I look at it more as like a process. Like I'll incrementally reduce risk as you progress from an uptrend to a downtrend. So a day like today, I don't think that you would want to dramatically shift anything in your portfolio on any given day. And this is more just general, because there's really not one prescription for, okay, you always should do this. But whatever your methodology, for me, it's gradual, right? So as we kind of roll over, I'm incrementally getting stopped out of bull trades, maybe adding some bear trades. So it's more organic over time versus just a light switch. And that fits my personality better. But what's challenging about the question, how do you go about doing it, is it completely depends on the portfolio.
The
right?
nature of it. Yeah.
Yeah. And so, but conceptually, if my portfolio exposure was super, super bullish 2 weeks ago, it's got to be less so today. And how far you dial it back, whether that means you add bear trades or close bull trades, whatever it looks like, it's going to be some combination of that. Selling cover calls, buying protective puts. It could just be getting out of trades and not necessarily adding bear trades. I hate to be like wishy-washy, but it's the principles that are more important than the actual specific strategy that I would say right now.
Marky, let's get some of your thoughts on the technicals here generally, and then Tyler will come back and we'll actually go through all the different indexes, including the NASDAQ, and as well as the intraday timeframes, different timeframes. But Mark, just general thoughts. What did you read on market conditions here as we're kind of having a hesitation day? Little doji on the S&P, couple stocks are trying to battle back here, but what's your general read?
Right now, we are in the least predictable short-term type of pattern you can get. Okay, so, and what I mean by that is when we have a large distance, what I like to call a moving average pocket, where there's a huge distance between the 50 and the 200 in this case, and we don't have a known support level to draw upon, it can go a lot of different ways in the short term. The one thing, the most concerning thing to me are those falling moving averages, where even if you get a rally, you could get a severe slap down. In this particular pattern, I have seen every situation play out. I've seen it break the 50 and then just stick, like goes 3 or 4% lower like it has, and then just stick. And that becomes the new support. I've seen it free fall to the 200. We saw that in October of 2018. I've seen, that fierce bullish rally in the short term get slapped down to the 9 and then free fall. I've seen it go down a little bit further and then stick support seemingly out of nowhere. So like, this is not like the easy trend conditions. And this isn't like a consolidation pattern where you have a clear level of support bouncing between a clear level of resistance. This is in a really precarious position in which it could go a lot of different ways. And that probably ties into some of Tyler's self-proclaimed wishy-washiness, right? Because it can go so many different ways. It's hard to say this is exactly what you should do, because so much of it will depend on what news item drops that people use as an excuse. We've been talking about the causality in news headlines over the last couple of weeks, kind of making fun of them, of the Market Watch and Reuters, saying, hey, this is what's happening in the market and why, when really it's just been a technical sentiment battle. Mm-hmm. Headlines today, I loved them. They were, market tries to rebound. They didn't have anything. Like they're just like, I don't know, man. Like, why is the market up today? It's trying to rebound. We don't really have a good excuse to give it today. And maybe it's just the stock nerd in me that loves it when they can't figure out anything. Mm-hmm. But I mean, this technical situation can go a lot of different ways. It can go a lot of different ways. And so, and I thought what Tyler said was spot on when he said, he says, really what the best advice is depending on what you have. Because someone like me with low out of the money, low delta naked puts out of the money, there's a lot of watch and see. Mm-hmm. There's not a whole lot of defensive action. Maybe I roll down one or here or there. But, but if you were all out of the money options, 2-3 weeks ago, well, it's too late now. If that, so it really depends on how you approach the market, what your portfolio looks like, how aggressive it is, how leveraged, and hopefully you weren't over leveraged coming into this, but obviously if you were, that's probably had to been reduced quite a bit. And so it really is who are you as a trader? Who are you as an investor? How much exposure do you have? How much risk tolerance do you have? And how familiar are you with those defensive strategies, like selling calls and buying protective puts and different mechanics you can do? Mm-hmm. And so I am going to double up on Tyler's wishy-washiness, because one, we don't know how this plays out, because it can play out in all kinds of ways at this point. There's not a high probability scenario. And that's what we do as traders. We try to find high probability scenarios and take advantage of them. We don't have a high probability scenario right now. And two, it depends on what your portfolio looks like and your risk tolerance and your time frame. And so there's a lot of unknowns right now. I'm always going to, at the end of the day, say, be more cautious than not, but that's my advice. Uptrend, or a parabolic move to the upside, or in the situation we find ourselves in now.
Mm-hmm. If this is a rebound, that is one very flat basketball, in my personal opinion. So I don't know what financial news site called it a rebound yet, but what are we up? 0.05%. I guess an attempt at, bounce off of a floor here. But yeah, definitely, I kind of chuckle at that as well. And I understand the wishy-washy nature of what you guys are talking about, because it's not like these charts are strong yet. And Tyler, one thing I did want to do.
We need to phrase that. Because they're not strong at all.
Not at all. No,
so not strong yet, because I know, the hangover of the relentless uptrend still resonates in our mind, right? Mm-hmm. Stocks only go up, things go up. And so that is still lingering. And Tyler and I here on the show today, you got two perma bulls, right? Tyler and I aren't exactly smash the sell button kind of guys.
Yeah.
And it's just a time of caution. The charts are not pretty. They're very precarious. There's more room to the downside in the short term than the upside. Tyler and I, I'm sure, are definite buyers at some level, almost blindly if it hit a certain point.
Well, and getting defensive now is what allows you to get aggressive later, right? Because if you don't get defensive now and it turns into something bigger, by the time a tradable bottom does come in, you're too shell shocked.
You're too shell shocked, and you don't got any bullets.
Yeah.
You don't have any firepower. And it's such an art form, right? Of taking advantage of uptrends. And then when things reverse, not panicking, but still giving yourself ammunition to take advantage of really good deals if they do occur.
Yep.
And because, I mean, if something happens and it tanks another 6%, because I don't think, Tyler, I don't see the conditions where you have this huge, massive sell-off. But you still,
and if you did, Mark, it'd be like, okay, give me the VIX back up at 40. Let's go back to selling puts. You just repeat the cycle.
You just repeat. You repeat the cycle, and you just don't want to get hurt too bad on the way down. I mean, I'm sure, Tyler, your trading account's down over the last 3 weeks. Mine's puttering water the last 3 weeks. I think down a little bit. I mean, it's just minimizing the damage in these situations so that if that double bottoms, let's say it sticks 3,000, comes down again, and then boom, you have a really nice breakout of a short-term consolidation. You want to take advantage of that, right? You want to be able to take advantage of that and not just, so I like the word shell-shocked, that you are incapable of doing anything.
Tyler, one thing I did want to do here today is do a thorough technical read across different timeframes and hit all the indexes if we can, because I mean, the S&P broke below that 3,300 level, but it's a slight different read on the NASDAQ, in my opinion. Just a very, very subtle one, but important to kind of note where that support is. Break down all the indexes if you can.
I think it's interesting that the NASDAQ led us into this. It was money coming out of those overheated tech names. And yesterday, tech stocks kind of lead us out, right? They were the first to sell off. Now they're the first to rally. And at the risk of reading too much into one trading session, yesterday it was kind of like they were saying, all right, we've already beaten the crap out of tech. That's enough. Let's go beat up small caps, right? Like they've already been beaten down. Bargain hunters came into Apple. They came into those large cap FANG names. So it was impressive. I mean, the NASDAQ ended up yesterday. Small caps were down 3.5%. That is a massive, massive discrepancy. And it speaks to who did they like and who did they hate. And I think it's interesting because that was reversed last week. They hated tech. Small caps actually didn't do too bad. Yesterday, they gave it up in small caps. And that speaks to maybe a little bit of the changing narrative, because when you look at the leaders for the coronavirus stuff, small caps were getting hit, restaurants, casinos, airlines, all the rest, energy, and tech did okay, right? That's what we saw yesterday, right? Where you kind of had a return to that playbook where they're like, all right, let's go buy up Zoom, let's go buy up these tech names, and then screw the restaurants, screw the airlines, screw the cruise lines. They just got smoked yesterday. So it'll be interesting to see if that continues. But you do got to be pleased if you own tech stocks that they finally returned to relative strength yesterday. So here on the daily, you've got nice bullish hammer candle holding up okay so far today. But the challenge is it's not like it was back here where you're in an uptrend with no overhead resistance. You've got a ton of slop overhead. This is why we say rallies are suspect. It doesn't mean we can't go higher. It's just not as much maybe room to run, or it's just not as easy to trust it. So on the daily, Tim, you got the declining 9 EMA, you got the 50 EMA, you got prior pivots. Yeah, two nice bullish yesterday. Today's kind of neutral, but you got to build on this for the trend to change, right? You look intraday, as you would expect with a doji on the daily. I mean, the intraday is just kind of I see a lot of chop right now. 5-minute chart looks somewhat neutral to me. It's not convincing. Not to where I want to press my bets with a bull trade here. I need a fat pitch. It's like Mark said. What are the odds? I don't want to be pressing my bets when the odds are not there.
Yeah, no, and it's one of those things. And unless I am usually like, and really like when I say usually like 95% of the time, and the only time I can think in the last 5 years where I wasn't, I am usually willing to miss out on quick V-shaped recoveries, because I think that is the mentality of a lot of traders is, but what if it goes back up again? I don't care. Like, listen, the technicals are the technicals. And if I happen to miss this gigantic rally in the face of a really ugly chart, I'm willing to do that. The only time I didn't feel that way was at the start of 2019 when Jay Powell pivoted. When you had the huge move down at the end of 2018 that was on central bank worried about their policy, and then Powell pivoted at the start of 2019. And that was, I was like, oh, well, all the reason it was going down now is the opposite. But most of the time, people are like, oh, I got to buy the dip because it's going to go back to all-time highs. Maybe it does, right? But I'm always willing to miss out on that, because if it does, great. I'll make a little bit of money on existing positions, but I'm not going to add new, things in the face of ugly technical charts. It's one thing on how you manage your existing positions. It's another to spit in the wind and say, yeah, I'm just going to buy in the face of overhead, falling moving averages and overhead, resistance levels.
Well, and I think that's an important point, because it's not like you aren't participating. You are. You've already got some exposure. The question is, did you feel comfortable to really up the ante? And the answer is no. And that's why it's very hard if you have the perspective of I'm either always in or always out. Well, yeah, that's hard in a situation like this, because it's like, well, I got all out. So now I feel pressure to get back in because I don't want to miss the V-shaped recovery. It's like, well, maybe you should view things as shades of gray versus
it's like a dance, isn't it? It's like a dance where, it's not an it's not your portfolio is not a binary decision where you're all in or all out at all times. Now, it should never be a binary. It should be risk management and adding to winning positions and
because binary is the hardest way to go about doing it. You're either really right or really wrong, and you just can't handle being that every single time. It's just too tough on the emotions. You'll quit.
Mm-hmm. Mm-hmm. Some of the stocks, though, that might be grabbing people's attention if and when markets do kind of find some clarity, and I'm with you guys, the caution, I think, is the right attitude and whatnot. But where the strength in the market was on that tech rally, obviously, is where the pullback has happened. Tyler, I want to go through the FANG stocks here and see if there's anything in the individual components, because, the NASDAQ is below moving averages and still hesitating at the pivot. There's still lower prices potentially here in front of us. S&P broke below the pivot like you talked about. But give me a look at Apple, Microsoft, Amazon, Google, Facebook, the big ones, and tell me if there's any strength there, as we do cross-market analysis as well as individual company analysis.
My preference in a market like this is to fade extremes. So like when you look at Apple, this is how I prefer to play these. You look at Apple back here when it got really oversold, you had a nice couple-day relief rally, right? Yesterday morning, Apple opens lower after dropping for 4 days. It gets to an extreme, finally you get a nice little pop. I prefer to look for extremes like that, sell puts or put spreads. You look at Apple today and it's like, what do you want to do here? Right? What are you going to do? It gapped up this morning. They sold into the gap. It's now back below the 50. You got to be mildly disappointed that these tech names didn't show a little more strength. It's like they loved Apple yesterday. They loved AMD yesterday. And today they're like, I kind of like you.
Well, if the 9 EMA was on that chart, you'd be seeing this little slap down by the 9 EMA. And this is what I worry about the broad markets as a whole. As a moving average aficionado, I've seen this happen a lot on all kinds of time frames where you rally up to the 9 and it slaps down, and whether that was an 8, a 9, or a 10, whatever your preference, you'd get the same type of thing where you get the rally and then it gets to slap down, and that's normal, right? That's just really, really normal price behavior from my study of moving averages. Now, in the times where it can power through, that's usually a good sign, because usually it means that you might have some sort of consolidation range at a minimum before you get that spark and then lift higher. But for now, I mean, that is like a moving average bearish retracement right now. Yeah. And as long as it stays below the 9, the chart's in a precarious position.
Well, and if you think about what's working, it's not chasing. I mean, it has not been chasing it into strength, right? It's been looking opportunistically intraday when it's oversold to play a snapback. And that's a harder way of playing it, by the way. I'm comfortable with it just because I've done it a lot. But yeah, you rarely get paid buying into declining 9 EMAs, like Mark said. I think that if you like Apple, I'm hoping it drops again. Give me something oversold again towards 100, and then I'll do something. But if it's chopping in here, I'd rather wait for it to take out resistance than fiddle with it while it's chopping. Mm-hmm. Mm-hmm. As for your others, Facebook, similar story, less powerful than Apple. Anytime, I mean, look at the 9 in praise of Mark's girlfriend here. 9 EMA. This is your current girlfriend, right, Mark? 9
it has
EMA?
Been my girlfriend for a long time. It will be my girlfriend.
You're committed.
Long after I'll probably get married again in life. I'm always going to have the 9 be my side action there,
I got you. She's predictable. That's always good.
Yes.
You know where she stands.
Treats me well.
So ever since we cracked it, it's been resistance all along the way, right? And so why second guess it? Facebook's below the 9, below the 50. Today's rally's lackluster. It had a doji yesterday, not much volume. I don't see anything here, Tim. Mm-hmm. I don't see any reason to buy it. Amazon, you mentioned, had an upgrade today, so this has got a little more oomph. This did come into a horizontal support level. So you did have a reason for buyers to play some defense here. But again, it's like, okay, well, what am I going to do? It was at 28.70. It's up, I can't do math, $200. It's right into the 9 EMA. They're not making it easy to buy this gap up. Buying a gap up in a downtrend is tough.
It really is.
So in a situation like this, you'd rather be forced to buy it higher when it clears everything, or wait and see if it goes lower and you sell put spreads into weakness. That'd be my preferred play. Mm-hmm. I doubt. Who else we got? Google.
Yep.
Copy paste, Tim. I mean, nothing different. It held at 200, great, but holding long-term moving averages is tempting if it's oversold enough where I can get far out of the money on a bull put, but I wouldn't do long calls or bull calls or anything aggressive until the trend.
One of the healthiest charts right now is Nvidia, as far as those big tech names. Nvidia is not in the same league as the ones we've just been looking at, but Nvidia held some horizontal support levels, and if you go to the weekly chart, it is one of the few companies, and if the 9 EMA was on there, you would see it's just sitting and it's been bouncing off that. So as far as like relative healthiness of charts, Nvidia has held up stronger than most,
Yeah.
So, and this is something I do in these times. I'm like, if we get stability in the markets again, what are the companies that are positioned to take that next leg up and maybe have great trades on them? And I look at because you think about it, there's a lot of downward pressure everywhere, right? Who's holding up the best? Who are investors and who are algos coming in and saying support levels hold and certain technical signals hold? And so, it's not the prettiest chart you're ever going to see, but relatively to other big names, it's pretty healthy.
Mm-hmm. Mm-hmm. Are there other names, Mark, that grabbed your attention, like a Nvidia? There were. I'll tell you one of the stocks that I was playing. I think it was even on the option report over the weekend. I think Tyler, what were some of the candidates there?
I got them on my chart actually right now.
Yeah.
Target.
Twitter is having a good day today. It's actually bouncing and rallying, looking really good. So there is some strength in the market still. There are some individual candidates that are grabbing my attention, right?
And once again, in the sell-off over the last couple of weeks, what chart held healthy. You held the old breakout level. You formed a little short-term consolidation pattern. And so in the midst of all of the market volatility, you know, it's really hard when the market's going down for a stock to be like, yeah, I'm just going to go swim upstream. But the second you get a little lull today, what did Twitter do? And you kind of saw that. It's one of the reasons we all approved it this weekend, is because in the midst of all this volatility, Twitter held its own.
Yep.
Twitter held its own. And then when the signal came, I mean, it's one of the things, and one of the hopefully the services we provide for our pro members is to go do this, you know, what do we call it? Bird dogging for you. Go find the charts that are looking healthy, even in precarious positions. And so that was a nice little breakout signal on Twitter today.
Well, and there's two more. Target was the same. Target held firm over the last 2 weeks as everything else was getting hit. Nice hammer candle yesterday, big breakout today. And then CrowdStrike. CrowdStrike held firm the last couple of weeks as the NASDAQ's cracking the 50, right? This is holding really at and above its 9. And then yesterday was one of the leaders, right? So I agree, Mark. And so we will not be surprised if Nvidia, a week from now, 2 weeks from now, whenever it is, if the market stops selling off, if this thing is a leader and runs back up to 600.
Yeah.
Yep.
Yeah. Yeah. All right, boys. I mean, the technicals aside, obviously, I mean, I do appreciate the breakdown one way or the other there. Marky, you had some news items on China. President Xi had some comments. We also had some updates on the TikTok deal.
I think he spoke. Did he? All right. So we got some things. Okay. First of all, on the TikTok deal, your daily TikTok, you know, most of us have never, have you ever actually watched downloaded? Does anyone here have TikTok downloaded on their phone?
My daughters do. In fact,
well, your daughters, but do you do?
I don't. I don't. They uploaded a little dog video yesterday, Mark. It had 11,000 views in a day.
How is that? God.
Yeah.
We need to get your daughters on here to promote our video.
Yeah. It's crazy. I mean, it was like a 15-second little song and dance kind of thing with a dog, and it was 11,000 views in one day, Tyler. So, and they don't have a big following. It just, whatever the algorithm is on TikTok, they've got that figured out. I will tell you that.
I wonder if that's how they hook new users. They just artificially make it look like everybody's watching your crap.
That's a good idea.
So you get this ego boost, and it's like, oh, snap. All right, I'll use TikTok.
Your first video you post, they just put it in front of everyone.
Oh, yeah. Yep. They get you hooked, and it's like, okay, I'm a pop star, baby.
I'm on TikTok.
I'm going to be on this every day.
I'm Britney Spears, yeah.
I was about to say, maybe we're just going way too long on the halftime report. The halftime report should be 30 seconds, just really quickly. We just jam out everything and call it a day.
Yeah, buy the dip. Yeah, that's pretty much it. Anyway, Mark, what was the update on Oracle?
Well,
TikTok
here's your
deal,
daily.
Kind of stuff?
Here's your daily TikTok update, in which is the most overhyped story of the year, in my opinion, for the markets. Global Times came out again on the Oracle Walmart deal with TikTok, and they had a scathing editorial. And if you don't know who the Global Times is, it is essentially the mouthpiece in which Beijing communicates to the world different things, attacking President Trump for attempting a robbery of TikTok and violating China's dignity. Second time in 2 days, Global Times have used the word dignity in relation to the TikTok deal. So, I mean, there is a lot. That deal is precarious, to say the least, no matter what the United States wants to do. It's too bad. It would be a good get for Walmart and Oracle, but, you know, that chapter has not been completely written yet. But then President Xi had some pretty interesting comments, saying America acts as if it's the boss of the world. And in his UN address, urged that we should oppose protectionism and insist on openness and benefit for all, saying pursuing protectionism is locking oneself in a dark room. While wind and rain may be kept outside, that dark room will also block light and air. And basically, Trump didn't like that and came out swinging at Beijing again. So rhetoric heating up again. We've had a few weeks off of the direct rhetoric from Trump and officials in China. But, you know, obviously, you know, these aren't holding hand words. A lot of tension. Just a reminder about the tension between China and the United States. And market hasn't seemed to care about any of that over the months. But one day in the future, right, the market will be down and people will be like, tensions in China sending the market down, even though those tensions have been with the market for 4 or 5 months pretty heavily. So there's your China update for the day. Nothing on short-term price action, but one of those dark clouds hanging over the market like many others.
How's the FXI holding up, Ty? I know you play EEM as well as FXI at different. I think EEM more, right? That's the one you prefer.
Yeah, because it's not a pure play on China. You get more diversification with emerging markets, so I think it's easier. It's down today. FXI is down 1% today. Emerging markets down 1% too. Actually, not looking so hot, honestly, if it takes out support.
Yeah,
so
a little roll over there.
Yep.
Yeah. All right, very good. Mark, there was a prepared statement out of Jerome Powell that I read as well, and I know he's testifying right now. We're going to have to wait to see exactly what he has to say and, then unpack that over. I think he's testifying for 3 days in a row?
Yeah, and Matt's going to have a more in-depth take on Powell. Matt is definitely at Tackle Trading, the resident Fed expert. Some of the highlights there wasn't not a lot to see there as far as unknown things, right? He goes out of his way to defend the Main Street lending facility. He commented that sub $1 million loans are probably more protection for the payroll protection program than the Main Street facility. But, some interesting macro things, but no market moving that I've seen so far.
I froze there. You got me still?
I got you.
Oh, very good. Anyway, interesting macro things from Powell is what I last heard there, Mark.
No, interesting, but nothing that's going to move the market today or, because what the market really needs, aside from technical cohesion that forms a really tested support level, they need a spark, right? They need a reason to rally the troops. They need something, and we joked yesterday, they need Powell to come out and say, booyah, and the market's like, yeah, let's do this. They need something to lead the charge. If you go watch Dave Portnoy right now, he's not a general in command. He's scratching his head saying, I don't know why market's down. They need something to spark and get excited to shift that sentiment because the sentiment's sour right now. It certainly isn't bullish, and you got a lot of head scratching, and they need something. And the two most notable things would be something out of the Fed. Based on today, you're not going to get that this week, or they need that stimulus still. That stimulus still would certainly do it. Probably not going to get that this week either, right? So, the market needs a spark. They need some kind of spark to get it juiced up and fired up again.
Yeah, and the prepared statement definitely did not have any booyahs in it. I will tell you that. It basically read like chalk, like every one of their statements has for 2 or 3 months. Improving economic indicators. We're going to need continued support. We got to contain the virus, a lot of that kind of stuff. And yes, I can't wait to get the full breakdown from Coach Matt tomorrow after we get full analysis from what they've said there. And I know Mnuchin's on the Hill as well. They're going to call on the Congress to put more fiscal stimulus out there. We know that. They're going to ask for more help. They're going to say you have responsibility too, and probably just reaffirm what they had to say. But we'll bring that to you guys as we get it as well. Outside of, go ahead.
And part of me, Powell this week, it would be really nice not to be down too much more and get through Powell, because the one thing I worried about it when it was at support before. One of my things is that Powell in the questioning would say something like, listen, this economy is screwed if we don't get fiscal support. Fed member Evans came out and said every month without additional fiscal support risk recessionary dynamics. That's not new news. Everybody out of the Fed has been very adamant. We need fiscal support to help prop up this economy. But if Powell were to say something, like that could have made trip, he wouldn't say we're screwed if we don't get it, right? He would say something far more eloquent and pompous and dainty, but that the market heard that could serve as a catalyst. So it'd be nice to get through Powell's testimony this week without any major disruptions.
Yep. Let's continue with broad market top-down analysis. Then we'll get to individual companies. Tyler, go through crude oil, gold, and then the dollar, and then we'll get to individual stocks. Okay.
Yep. Crude oil. Hey, Mark, so much for that bounce last week.
Yeah, that was a nice, I think, short selling cover, kind of day trade-ish rally. And then it just got caught up in volatility yesterday. And
well, hard for it to stay up when risk assets are getting smoked, right?
I mean, oil is not going to swim upstream in risk off, sell off environments almost ever. So
totally agree. So I don't know that last week would have gotten you gung-ho bullish anyways, but this is a good example of why we say rallies are suspect when you're below the moving averages, right? When you're in a downtrend, you have to be suspicious with those rallies. They have a higher failure rate. Crude oil is a perfect example. And that actually spills into energy stocks. When you look at the mild bounce last week in energy, runs into the 9 EMA and just gets torched. That's the problem with bounces in a downtrend, right? So I don't see anything new in crude oil. I think it continues to be under pressure. And I think until you break decisively above the 50-day moving average, as with the rest of the market, path of least resistance is sideways to down here, Mark. I see nothing but that.
Yeah, and would be interesting, and this is where I'll step in as a buyer if I get my reversal signal, because we did have a short-term support level form around 36. And if we come down and test that and it hangs out, and then we start climbing above intraday resistance levels, I'll buy a bounce in that situation. We haven't had that kind of support level, but that I would get excited because I think that would be the start of perhaps a consolidation pattern. I'm on record in the commodities report the last week. I think we're going to have a consolidation range in oil between like 35 and 45. Maybe it's 36 and 47, right? But somewhere between a 10 and a $12 consolidation pattern the rest of the year. And I think that support level last week could be the beginnings of the bottom of that consolidation pattern. Obviously, wait for confirmation. That's just a given. But that's where I see crude oil. And I'm interested in a bounce with confirmation off that support level if it gets down there.
Agreed. Let's take a look at the gold. All right, gold and silver, particularly silver, just smushed yesterday. What do you? I have a question for you. What do you make of gold and silver moving with risk assets yesterday, just getting torched with everything else? A one-off or something that could continue?
I think it's not a one-off. I mean, we saw it happen earlier this year with COVID, right? I think there are stretches where accounts get over leveraged, where the market as a whole, market participants are over leveraged. And I think everything gets thrown out that, was the baby with the bathwater saying. The baby gets thrown out, and gold is the baby here, gets thrown out with the bathwater on these total risk off days. Because remember, gold has been treated a little bit like a speculative asset, not by us here at Tackle Trading, but by a lot of Johnny come latelys who are like, hey, gold to 3,000, I want to chase it. And they don't treat it any different than they do Tesla or Virgin Galactic or your pot stock or Beyond Meat. And so it's just all one big feeding frenzy, and that helped contribute to that massive run up. And so I think you still have some of those and some of those individuals treating it as a pure speculative asset play right now. Yeah. And so I think as long as they are a percentage in these risk off days, you might have that with gold a little more than you normally would. It's not a permanent thing. Gold will oftentimes trade against heavy market action depending on what the news is. Like trade war, for example, in 2018, market was down big. Gold was up. In fact, gold broke out in some of those stretches. So I still think there is this lingover speculative asset part of the gold community. They'll get shaken out at some point. But until then, you might have a few of these days.
If you try to trade gold, like you mentioned Tesla, you're gonna be disappointed more often than not. Yeah. Like it does have its periods where it breaks out and it runs, but most of the time it's more of a steady long-term asset. I mean, it's a hedge against inflation. If you're thinking it's gonna run like Tesla, you're gonna be disappointed.
Well, you don't want it to run like Tesla. I mean, even when it was, that was one of the commentary points we had, when it went
exactly,
parabolic, We're like, this is not good for gold. You don't want that. I like the consolidation,
Yep.
even a little bit of a deeper pullback. I wouldn't have any problem with that at all. There's not much that could happen in gold that would get me off my fundamental stance. In fact, I can't even think of something right now, Tyler, with all the money that's been created, especially from the Fed and everything that's been going on from a monetary policy standpoint. So yeah, I'm with you. I mean, do you like the price action, obviously, here the last 2 days, Tyler? You know, I think you guys did. I stepped away for a second there, but you do like the support hold, or are you concerned about a breakdown here?
Well, what's interesting, I mean, I think it's good that it's finding some support at 1900. There's really not much underneath that until you get to about 1820.
Mm-hmm.
And that's part of the concern with the run up that's parabolic, is it doesn't leave much by way of pivot lows and congestion areas to provide support. So yeah, I think if it breaks 1900, it could drop. But this is where you have to know in your head, why did you buy gold in the first place?
Yes.
Are you short-term trading this? Are you a long-term investor? Because if you're short-term trading it, then obviously you respect, short-term breakdowns. If you're a long-term investor, I don't know why breaking 1900 would change anything, right?
Mm-hmm.
I wouldn't short on the way down, but I would not be upset if it did drop down to that 1820 range.
Yeah,
I would actually be very happy about that.
If you want to make bearish
down
plays, there are better instruments. I mean, even within the metals market, I could understand spec bear plays on other metals. I mean, I wouldn't play gold bearish. It doesn't make sense to me.
Well, and the long-term trend is still pretty good.
Yeah.
So silver. So this one's interesting. What was this down intraday yesterday? 10% maybe. It was. I know, because mine was down. Yeah. So. What, the high 27.13, yesterday's low was 23.78. This was down 12% at the lows yesterday. Yeah, that's a pretty big deal.
You did the math, but you can just drag your pointer and the little blue box will tell you the percentage.
If I drag the pointer?
Yeah, like if you draw a line from the top to the bottom, there you go, 12%.
Don't screw my ways up, man. I know what I'm doing with a calculator.
I'm just wondering
this shortcut
man,
business.
Tyler,
Old dog, new tricks, man. Don't bring that crap up again. I'm just kidding. No, that's a handy trick. Yeah, that's a good trick. Anyways, does it change your outlook? No. I mean, didn't this do what you expect it to do? It's like high beta gold. It always moves more. You expect more volatility. I mean, I'm sure you're not happy if you were short-term bullish with an aggressive leverage trade. Down 12% sucks, but that's the nature of the beast, though, I guess. I don't know that I have much to say here, Tim, other than it did juice volatility a little bit. I mean, naked puts are paying you more than they used to, so you can look at this opportunistically, I think.
Well, and I actually think that's actually a very good point, because when you do see sell-offs, Mark, on instruments that you'd be interested in at lower levels, I mean, I don't know where that level would be on silver for somebody. Let's just take like a 20 strike price. You are going to get better premiums when you have the sell-off, you have the increased risk. If you truly do have fundamental conviction about a true ownership, Mark, of 100 shares on one naked put, you could take advantage of some of the sell-offs. And if silver broke down again, you might even be able to get premium down at like the 18 or the 16 or even the 15 level, depending on how deep it goes. And this goes back to boomerang philosophy 101, right, Mark? If you have targeted something you want to own.
Yeah, I mean, it's because silver's not gold for me. And so for me, I treat silver like I do natural gas. I treat it like, I think there's opportunity. I still think there is, I think silver benefits. I mean, the worst thing to happen with silver was the fast run up in the short term. It really was. But I think eventually silver bottoms out. It might be much lower, right? And then maybe starts a really nice gradual run up. I mean, those parabolic moves, they don't create any support levels. It's not healthy for a chart. And so it's great if you get in on the breakout and then, and willing to take profit. But, I'm definitely, listen, I own silver. I got called out of it on the way up. Would buy again. But I'm going to really wait for a technical pattern or a really get premium at much, much lower levels on silver before I start messing around with it again.
Next, the dollar and actually,
you look at that moving average pocket, it's a massive gulf on silver between the 50 and the 200. I mean, that is a massive gulf with no horizontal support really on the way up. So it's just a really ugly chart with some downside potential.
Next, the dollar, if we can here. And obviously, it's been moving into neutral range recently. We talked about the potential for a breakout. And actually, the dollar, actually, the first 2 days of the week here, Cody, has been very, very strong. The chart of the day that I put in the daily email today, by the way, was the pound dollar cross pair, which had a beautiful bearish retracement developing, confirmed and triggered. Cody, come on in here for a second. How are you approaching Forex right now? You're my Forex 101 kid. You're the one who did build that course over Forex 101 at Tackle Trading. How are you seeing the currency markets right now?
So I've been very neutral on the dollar as of lately, just because of what we were seeing. Every time I tried to pop and break down and immediately came right back up. That's why, I put it more in the neutral range versus the bearish range against the long-term trend. And we're starting to see that, reversal type pattern coming out. And I believe most of what we're seeing here is because of what's been happening over in the UK and over with the banks in Europe, and how everyone's actually not just speculating on negative interest rates, but actually seriously considering going to negative interest rates. So I think we're actually seeing some rotation a little bit back into the dollar for those reasons. So from that point, you're right. The British pound dollar cross pair, we did point that out last week. It did confirm, played out very nicely without any, whipsawing, which can happen in the Forex market. So the past 2 days in the Forex market have been very easy to trade, with the dollar starting to create that reversal. Now, it's got a lot of room that it needs to recover. So I'm not going to, immediately say we're going, strong bullish on the dollar. We got to be cautious here, because it could pop up and then immediately come back down. But if it did come back down, now we have a reversal type breakout retracement to where we can get some better setups. It did destroy some of the currencies setups I was looking at, like the Aussie dollar cross pair, destroyed that trade. The New Zealand dollar cross pair, with the dollar gaining strength and things moving out of these other currencies into the US dollar. That's why we're seeing the dollar some strength now, or reversal, not necessarily strength, but we're seeing money move back into the US dollar.
And Fortino has a really good question. Can you swing trade UUP? I don't personally, Fortino. I use UUP mostly just to track the value of the US dollar index. If you're interested in swing trading, Cody, you probably need to go to the Forex market itself, right?
Yes.
Liquidity, leverage, all that kind of stuff, like the pound dollar cross pair. And Tyler, bring that chart up for a second. We talked about this on Friday, and actually, it was just a beautiful, chart from a bearish retracement development. And you saw that, that little bear retracement, pivot, confirmation. Now we're breaking down below support. It goes to show there's a good chart somewhere. There's always good charts and a way to trade if you're just focused on the short-term action.
And if you did catch this trade, guys, I would say either take some profit now or get prepared to, because there's a lot of choppiness and stuff that it's getting to. Even if it does break that 200, I'm not sure how much further it's going to go before it starts pulling back. So when I broke it down, I actually placed this 200 as the target. So if you've hit your target, you should be taking some profit right now. And I also agree with your earlier statement, Tim, is that if you want to get into Forex, you should learn the cross pairs, because of the benefits from leverage and what you can do in the Forex market. And one of the beauties of it is you don't actually need all that much to get started in Forex. With a very small account, you can start trading Forex. Literally as low as a couple $100. You can get into the Forex market, and you'll be amazed the percentages at how far your money can go. But that's also because it's leveraged 50 to 1. So there's that bit of caution that I got put out there, is that just as quickly as you can have winning days, you can have losing days as well. So we want to still apply our normal rules and our risk management, but the Forex market is a beautiful asset when you get these type of setups that play out very nicely and cleanly.
Yeah, I love it. I love it. Good analysis there. And by the way, I would recommend that Forex 101 class to anybody who does want to learn Forex. It's a part of your pro membership over at Tackle Trading. Should be right under the courses tab. Let's move on to individual corporate news if we can here. And Mark, you had several items. I do want to start with Tesla, though, if we can. TSLA chart. And they've got their battery day today, Tyler, where they're going to be unveiling. And these events are marketing events, right? I mean, they're marketing events for investors and consumers alike, where the company's trying to showcase something they're
One
doing
might
with
argue
their
that
product line.
Tesla is one gigantic marketing event. So
It's true. It is true. We've had a rally into this event, though, this marketing event, Mark. And actually, Elon Musk kind of tried to temper off some of the expectations last night on Twitter. He was saying, hey, listen, we're not going to have significant production of this battery until 2022. So a couple of years away, whatever they do reveal here from that perspective. Now, the big hook here, guys, is that they think they're going to have a 1,000,000-mile battery, which means that you can continue to charge it and continue to charge it before it goes bad for up to 1,000,000 miles of drive time on a Tesla. Is this a sell the news kind of situation?
Heck yes, it is. Listen, that doesn't mean Tesla can't go higher. Market gets bullish. Technically, Tesla breaks out. It's a cult stock. It does cultish things. But like Battery Day was this big thing because earlier this year, Elon Musk, the new Barnum and Bailey of corporate CEOs, said, Battery Day, people, wait till Battery Day. It's going to blow your mind. It blows my mind, and I know it. Well, tempered those expectations the day before, right? And so Tesla's selling off a little bit. It's not that Tesla's not going to have great batteries and do great technology things, but there's just so much pomp and circumstance and nonsense around Tesla that you're going to get wild swings on news, right? I mean, you really had Battery Day's been this big known event. You've had run up in price, and then you're going to get a little bit of sell off, so the smoke and mirrors, is over. It'd be interesting to see what the final thing they divulge is, but Tesla is really not going to be any different than Tesla was. If you love Tesla coming into today, you're going to still love Tesla. If you're skeptical of Tesla, you're still going to be skeptical. Battery Day is going to come and go and be a non-event.
Tyler, how do you read that chart? Because you've obviously got a news event here that can be a catalyst. I kind of feel like it's a sell the news situation, but you do have a little resistance there. I mean, if the market decided to run on it, I mean, is that tradable? Like let's say on a trigger there?
Maybe. I mean, the thing you got to remember is Tesla's kind of volatile. So sometimes its patterns are messy. I think the better buy, and this doesn't take a genius to say, the better buy was the pullback after the really good momentum swing. At this point, it's got to clear the chop. We actually talked about this in the lounge this morning. I mean, is today actionable? What? It's a doji in the middle of a choppy range. What would you do here? I don't know. I think you got to let it cook. If you're a bull, I would want it at least to take out short-term resistance around 460. Then you got a clean shot to 500. Until it takes out 460, chopping around here, I'm not interested.
Next one I want to take a look at is Peloton real quick, and then Amazon. We did mention the aforementioned upgrade, but there's another news item here, Mark, where Amazon actually is going to release a bike that seemingly, I believe it's called the Amazon Prime bike. Is that right?
Yes.
And is that kind of competition with Peloton? Is that the idea behind this product?
Yeah, I mean, so Amazon came out to launched an affordable smart bike called the Echelon Smart Connect Fitness Bike Easy Prime. I mean, we need a much cooler name than that. I don't know that they need to work on that name. But the Prime bike, which is the short thing that's going to stick, right? The Prime bike was developed in collaboration with Amazon, who wanted to create the first ever connected fitness product that retailed for less than $500. So they're coming into the bike market. Because Amazon, remember, if you need to question it at all, the Great War of 2332 will be held between Disney and Amazon, where they wrestle for the control of the world. Because there is nothing that Amazon won't get their domineering paws into eventually. So they're competing in the smart bike market, the Prime bike, competing on cost. Now, the one feature it doesn't have is it doesn't have with a screen to view live classes, right? Now, that's been the big thing with Peloton and in one of their shifts, that it's not just a bike, but it's this interactive community where you can take live classes. So you would have to use an iPad or another smart device to have the same effect on the Prime bike. But Amazon coming into the market, Peloton down slightly on the news. The one word of caution I would have on Peloton, if you own Peloton or are trading Peloton, is that we have seen a real huge effect. We've seen it in pharmaceuticals with CVS and Walgreens. We've seen it with FedEx and UPS, that when Amazon comes into a marketplace, there is a dampening effect that starts downtrends, to be honest. They've had really huge catalysts in both the Walgreens CVS space and the UPS FedEx space before. So that's one thing. When they enter a new market, it can trigger not just a short-term downtrend, but a pretty significant downtrend just on the news and this fear of the behemoth that is Amazon.
And I do understand that caution, but for right now, the chart doesn't seem to be breaking off at all here, Tyler. I mean, 2% down on the news, but still above that 9. You know, Tyler, when you hear something like this, you hear a behemoth like Amazon, a huge company like Mark's talking about, coming in to compete with a different company, a smaller one like Peloton. Does it give you caution with Peloton, or do you just focus on the chart price action?
It's a softball, Tim. You know the
I know
answer to
you.
that.
I know you.
I rely on people.
Dude, that's what I do, is throw softballs. When are you guys going to learn this, by the way? I mean, I am the softball pitcher from a good pitcher. Town. That's right.
I rely on people much smarter than me to tell me if it matters or not. And that is the market. If the market cares, I care. If the market doesn't care, I don't care. I mean, think about how arrogant it is to be like, you know what? I'm so much smarter than this stupid market. The collective wisdom of all people putting money where their mouth is, they're bozos compared to me. They think this news doesn't matter. I think it matters. Screw that, I'm shorting Peloton. I just don't think that highly of myself, Tim.
See, I do.
If you think that way, you need to read Trading in the Zone.
Listen, Tyler is what I call a pure technician. Tyler and Frank are what I would call the two biggest pure technicians that tackle trading. They let the chart do the talking. They can hear Amazon's doing news. They don't care. They can hear, and there is so much merit. I would actually advise almost everyone to become a pure technician as much as possible. I think it really would benefit you in the long term, because you can overthink things and you are not always going to be right. And at a minimum, the worst thing you can do, playing on what Tyler does, and I've been guilty of this before many years ago, is be like, the chart's telling me one thing, screw that, I'm shorting it without a signal.
Yeah.
I did that with Beyond Meat last year. I was right eventually, and had I waited for my signal, I would have made money. Instead, I had my worst trade of last year because I tried to outsmart the chart. Usually ends badly when you do that.
Well, and it doesn't, I mean, look, of course, is this potentially bad for Peloton? Yeah, sure. I mean, but that's obvious, right? It's not as simple as saying, oh, there's a competitor entering this space. Short it. It's going to go down. It's like, boy, that's a genius thesis. How'd you come up with that, right? I'm sure you're the only guy who thinks that. So yeah, it could matter. It may not matter, but it doesn't matter to how I'm going to make money, or it doesn't, my ability to answer that question is irrelevant. It really is just a matter of how you can make money off of it and what's your trigger.
How annoying do you think these companies find it when they come up with a great idea like this, and then you get a bigger company like Amazon?
Well, it's why, like,
or Fitbit and Apple. Like,
I'm on the opposite side of that.
Apple's like, we'll do that. Like,
no. Listen, it is the utmost sign of a compliment and respect when other companies are going to try to come in and compete with you that you've grown a great business idea. I mean, think about that. I mean, you want competition because that means you found something, you've tapped into something within that marketplace or that concept to where you're bringing a solution to the consumer. So I actually think it's a sign of, great.
Yeah, well, and I'm going to take it even, listen, a moat is a very important thing. Like, trade the chart, and I applaud pure technicians. But from an investing thesis, like, one of the core principles of Buffett is the concept of a moat, that a company has a protective layer that protects their business. Peloton doesn't have a moat. It got a brand moat, maybe, right? You know, maybe if they get enough people into the ecosystem and their classes that never leave, maybe they can build that over time. But, you know, from an investing standpoint, I mean, you got an insanely high valuation with no moat. You got a big guy coming in the room. Trade what you see on the chart, sure. But man, I didn't like Peloton before this news. Sure as heck don't like it now.
But moats aren't just given, though, are they? I mean, you can't
gotta
just
fight
build
for
one.
your moat.
You
Listen,
gotta fight for it, and you've
you
got to
gotta
earn
dig
it.
that out
That's
and
right.
get the water and go find
Sweat,
the
tears,
alligators
that's right.
and put them in the moat.
That's
You know,
right.
I'm going to go pay Microsoft some money here shortly because I can't live without Word, because Word and Excel and PowerPoint, I mean, they're all part of, I have to have them to do. And so I have no choice but to pay them some money. That's a good moat. When I don't want to do something and I still have to.
Next one, I want to get you guys' take on this. If you have any interest or not in some of these news stories, give me Carvana if you can, CVNA, Tyler. A couple of different notes on this. I mean, Carvana, you know, obviously the online marketplace for used cars, they're up huge here today after a couple of different news items. Number one, Goldman Sachs gave them an upgrade to buy from neutral, and that was on the backs of a report that Carvana came out and said, listen, we're up you know, year over year on our metrics for the third quarter as well, on revenue, unit sales, profitability, everything is improvement. And actually JP Morgan also came out, gave them the double upgrade in the same day. Interested or not here is kind of a volatile chart, a little bit noisy up here on the top. It was a very consistent trend there for a long time. Great performer, high momentum play in this kind of market. Start with you, Mark. Interested or not?
I mean, listen, it dropped from 235 to 160. This is a wild child. Could go a lot of different ways. I don't have any interest at all until some semblance of cohesion on the technical chart occurs.
Tyler, what about you? Big gap, runaway here.
Yeah, I mean, so it's going to depend on if that's if you like trading gaps, sure. Get in a time machine and buy the break or the 5-minute high this morning. What are you going to do now? I mean, it's not my cup of tea, Tim. And I don't even know if the options are liquid, this being a newer issue.
They wouldn't be liquid today, even if they usually are, right? I mean,
bid-ask spreads are wide because you got so much volatility. I don't know. I think, look, if I was a momentum trader, yeah, of course it's going to be on your radar. It's got some juice behind it, but I don't like buying after being up 32%. I don't care if it does take out the high. It's up a lot. I'd wait for a better setup if it were me.
Next one here, same kind of deal. Give me Teladoc if you can. This one's been a hot stock as well earlier in the year. Very, very choppy up there at the top as reversal patterns are developing in the last month and a half. And there's a lot of stocks that kind of look like this. Moving into more of a neutral consolidation, little bit of a triangle developing there, but Teladoc got an upgrade out of DA Davidson. They initiated the stock with a buy rating, $250 price target, Mark, which actually seems, for some of these Wall Street firms, that seems pretty reasonable since that was just the high back here in August. At least they're not putting it up there at 1,000. Now let's start with interested or not here. Tyler, for you first.
No.
Neutral range, Mark?
Yeah, it's in the middle of the range. I mean, I don't know what
I think you're going to have a lot of the stay-at-home stocks have patterns like this. I think your Zooms, I think your Pelotons, I think a lot of these, you're going to get some really choppy, really wide ranges. Now, I do like the little bit of the support level that was formed there, you know, and so maybe if it comes down again and I get a reversal signal, I want to play a bounce. But you're going to see some really, and they're not ugly charts because that should be safe for situations where it could go either way. You're just going to see some wide ranges on a lot of these companies, and wide ranges can be some of the toughest ones to play. And so, you know, no interest today.
And then last one for me is just a quick peek at Nikola, if we can. It feels like an obligatory daily 30-second look at see what this stock is doing. You know, the CFO came out and basically said, we're moving forward. This was a decision by the board. It's so that we could get rid of the noise from Trevor Milton and whatnot. It's still Trevor Milton's idea and company, but people started getting too focused on him instead of what the company's trying to do moving forward. Some pretty concerning stories out of this stock as you start to read into them as to what happened. But it doesn't necessarily, I don't know, it's still very, very up in the air for me, Mark. A lot of gray area in here that I don't really have answers to, and I don't think the marketplace does either. Tyler, you know, have you been following this storyline, by the way, with Nikola?
Yeah. I mean, it's like when you pass a train wreck, you can't help but look.
Yeah. Does this just put?
Yeah. Did you sell a put? I want to know from last week, because I saw Tyler's eyes get wide when he saw those premiums in October.
Not yet, but I'm sure, you know, so here's the interesting thing. This was before that down gap, and they're worth less than they were last week, which says something about which says something about how much movement was priced in, that the thing could gap down as much as it did, and the puts didn't budge. No, I did not sell a put, Mark. I probably should.
I did.
I didn't.
That would be the only way
I'd
get involved with this.
I want to go back on that because I think it's a very, very interesting point. I did not notice that the premium was basically the same on the same strike as it was before the gap. So a stock that just gapped, Mark, 19% on a Monday morning in after the CEO resigns, you're not getting more premium at that strike than you were last Friday.
It's the power of time, right? Mm-hmm. And it is when you get these. It's these Kodaks, it's these Nicolas, it's these, oh my gosh, what is the outcome potential? Like, I mean, when you're getting that kind of premium at 10 and at $5 and at $7.50, like some really nasty stuff has to happen for that premium not to slowly bleed off, because because there's such a wide range of outcomes, because you could get some really good premium for out of the money calls. Now I wouldn't do that because it's 2020. That thing smacks you in the face. But Nicola can keep going. It could be down $4 tomorrow. And depending on what the news item to send it down $4, those puts might not have changed a whole lot, right? Because it's the thing, and this is where education comes in. Because how many days are we out from October expiration? What are we, 25, 24? Yeah. And so that theta just bleeds off, and you're getting in this really accelerated part of the option theta curve. And so price can go down, but if it's not going down proportionally, premium can go down too, the closer you get to expiration.
And Mark, you had a couple other news items, I believe. Is that right? Did you have other stocks that were grabbing your attention?
You covered a lot of them. Just some upgrade downgrades. Walmart upgraded by Oppenheimer, had a couple upgrades. Walmart to 152.
I like
that Walmart dip.
Yeah,
I like that. See, I like that. Come down, support, breakout level. That's a nice chart right there. That is a really nice chart. Facebook upgraded to 300 from Oppenheimer. Listen, these sell side folks, they don't know a chart that doesn't deserve to get upgraded, right?
I don't get this one here. I mean, why today? Do they just not believe in technical analysis? Some of these firms?
They don't use technical analysis
at all
in any of their decision. Have you? No, they don't.
Yeah,
so
it's crazy to me.
It's probably like, we need to jack up this price and find a reason. No, they don't use technical analysis in their decision. Apple raised to 120 from 110 at Raymond James.
Is that a swing trade target? Is that T1?
It's like
in the step system.
What do we? The dude needs to pull his weight, and okay. I mean, how often would you have to shift the price target if you're shifting it $10 a time? It's like, well, hey, my outlook has shifted so much that I think this is going to be worth 1 ATR higher.
It seems like, how do we jack up the price with giving us room to jack it up even more later? It seems silly.
He should have lifted it from 110 to 111. I mean,
feels like he's filing a TPS report here, just kind of a waste of time. Like 110 to 120 on a day where what reason doesn't make sense to me.
One that we don't follow that often, CREE, ticker symbol CREE. Morgan Stanley suggests buying CREE during the recent weakness, saying electric vehicles and clean energy investments are accelerating at breakneck speed, and CREE is in a strong position to benefit. So they came out with a huge, still acknowledged downside price movement, but really came out pounding the war chest in a big way for CREE. I actually put CREE on my watch list just to see if that bottom forms. Because if you can get it's the type of stock that if you can get a breakout at some point in the future, maybe 2-3 weeks or 2-3 months, who knows, right? I thought it was, I really liked, they convinced me to look into the company further.
That's a smart upgrade.
So
I think that's a smart upgrade.
Yeah,
it's better than saying, well, the stock already went past our price target $50, so we figured we might as well update it.
And then there's increasing chatter on UPS and FedEx, pick your chart that you want, as potential vaccine distribution plays. Now, FedEx and UPS have been two of the sneaky winners in the COVID situation. A lot more packages being sent, huge, massive earnings results that we've seen. Lots of people shipping a lot of stuff and huge, massive winners. Now, there has been some concern, including myself, that, hey, you know, as COVID vaccine, but people are starting to spin it, keep that sentiment chain rolling and saying, listen, when the vaccine comes out, UPS, FedEx, huge winners in the potential distribution of said vaccine. What do you think of the chart?
I love the FedEx chart. I'm not sure about the UPS chart in the short term. UPS would probably need a breakout up here for me, you know, kind of clear some of those highs. And even that one red candle is a little bit messy. But yeah, if you get a breakout after consolidation, looks like a good momentum potential play. FedEx is a little cleaner in the short term here, Tyler. Do you agree?
Yeah, nice hammer candle yesterday. I mean, if you're buying dips, this is the kind of dip you want to buy. A super strong trend, pull back to the 9 EMA. I mean,
I agree.
it's not to like.
I thought the FedEx chart and the Walmart charts were particularly pretty in this situation.
Both looking clean for sure. Very cool. Very good. Thank you, Mark, for getting those updates. Couple of quick ones I wanted to take a look at, Tyler, from your options report over the weekend. I really thought there was some nice development on some of the charts. We did look at Twitter earlier. We talked about Target. Did we look at Target, by the way?
Yes, we did briefly.
Unbelievable. Nice little breakout. What a clean trigger, pivot, and run. CrowdStrike. Nice trigger yesterday, looking good on that Bulls team. It's amazing when you find clean charts, a lot easier to trade those when they are clean charts. And then some on the bear side, Tyler, that I'm kind of impressed with just from a momentum perspective. Cigna had a nice breakdown yesterday, nice follow through here today, carrying through. That XLE chart obviously continuing to carry through as well. Great report over the weekend, Tyler. I mean, just talk a little bit about how you use those watch lists yourself, how we put them together, and you know, the options report.
Well, think about we began this halftime report with a conversation on what would you do to your portfolio because the market's showing weakness. You know, we talk about maybe you get stopped out of bull trades, maybe you add some bear trades. So on a week-to-week basis, if I feel like market conditions have shifted, I need to shift a little bit. Those weekend reports give me potential ticker symbols I can use to accomplish that, right? So if the market is turning a little bit more bearish, then the bear list becomes more important to me because I've got guys there that I want to consider adding if I want to reduce exposure. If the market is getting more bullish and I think, hey, I want to increase exposure, then it gives me ideas for what are the best stocks right now that I could go after to increase exposure. So I like it, Tim, because whether bull or bear, it gives me just a go-to list of candidates where I can immediately deploy some trades that day that shift my portfolio the direction that's needed.
Sure. Yeah. And I love that concept of bird dogging. We all go together and we put them together. I love those meetings we do on a Friday. And I got to tell you, the reports have just been killer for a very long time, especially if traders know how to use them properly with triggers, confirmation, the whole thing. Great job on the weekend. Guys, let's, you know, kind of a light day from other areas of the market's perspective. Obviously, we're going to get more analysis on Powell tomorrow. Let's get some final thoughts from everybody. Mark, you're first.
You know, not a lot to add that what I've done, you know, like, at some point, I think there's going to be a nice buying opportunity. I'm going to be really, really hesitant in the face of falling moving averages. I would like to develop some kind of short-term consolidation pattern. I would like there to be a real spark. Now, I'm still doing my, you know, I sold a few naked puts on the volatility at much lower levels yesterday. So on big spikes on down days, you know, I'm going to use those on things that I want to sell naked puts on at really lower levels and take advantage of that. But as far as directionally moving up, the charts are too ugly for me right now. Unless you find those really, really, really pretty charts.
The individual
there's a couple of them out there. And in those situations, especially if they're not like so often all a trader wants to do, and I'm talking about new traders, I want to trade Apple, I want to trade Tesla, I want to trade Amazon. You know, those charts are broad market charts. They're going to go with or without the broad market for the next few weeks. That's not necessarily true of Target or CrowdStrike or Twitter or a lot of those others. So there are spots, and especially if this market consolidates, there's going to be some opportunities. Just realize that as long as the broad markets are in a precarious position, don't go crazy on those. You know, pick your spots, pick your spots, pick your spots.
Tyler, final thoughts from you, sir?
Oh man, I would just echo everything Mark just said. I like fading extremes in a situation like this, waiting for a fat pitch. I think that if you can view short-term trading as less a binary exercise and more just a gradual shift in exposure, like today, I don't feel pressure to add a bunch of bull trades because the market's going up, because I didn't get out of all my bull trades on the way down. Right? If I got completely out of everything on the way down, I'd be feeling a little bit of pressure, because I'd say, oh, well, what if this is the beginning of a bigger bounce? Right? I think just, I don't know, that's the thing that stuck out in my head, Tim, is thinking less, I have to be all bull or all bear, and thinking more about shifting portfolio exposure with the trends. I think can allow you to minimize regret and avoid a lot of dumb mistakes with chasing. So I'm impressed right now with the market. I mean, it's coming back up. NASDAQ's up 1%. You know, maybe we'll get a decent bounce out of this. But I would continue to just be very discriminating and picky with the types of trades I take right now.
I mean, we could have a first test of that 90 EMA as early as tomorrow morning. So it's going to be really interesting to see how price action, if it can clear it, even if it's in the short term. Because what I've seen in these charts, like sometimes I'll see it clear and then fail again. But when if it can just clear once and then come down again, it oftentimes responds really well to that next support level. So yeah, these still remain my favorite markets of all time. I hope things never change.
Got to be impressed with the intraday breakout though here, guys. I mean, I do see that 90 EMA coming into play on the daily chart market. It might even test it today, by the way. I don't know where it's at, on at least on the NASDAQ. May not test on the S&P, but on the NASDAQ, we're getting pretty close to it. I think first of all, I love the analysis here today. I think you guys are spot on. Caution here, guys. No question about it. You have weakness in the technical charts. We're getting some interest in the intraday strength here, Tyler, kind of a little rebound. Nice close yesterday. Nice little intraday breakout here today, but let's adjust portfolios. Take it a step at a time. Take it a trade at a time. Don't make radical decisions as markets are kind of changing. Learn how to trade the markets day by day as things are adjusting. And then my last thought actually is that we put out a really enjoyable podcast yesterday, tradingjustice.com. If you guys are a podcast listener, if you want something to listen to while you're cleaning the garage or mowing the lawn or whatever it might be, episode 291 on the history of retirement accounts and retirement models here in the United States. Mark, I thoroughly enjoyed the conversation. I thought it was really, really fun to talk about that history, how it's evolved up to where we are here today. And it's really setting up a nice one for next week as well, when we talk about the future of retirement accounts. Go check that podcast out. No question about it. Other than that, guys, great job here today, everybody. I appreciate you, Cody. Great job, Tyler. Great job, Mark. Team Tackle. We are done today. We'll be back tomorrow, same time, same station, and expect some analysis on what Jerome Powell had to say if it's a market mover. More updates on the chart, but we will see everybody tomorrow. We're out.